Welcome to Get Serious. Today's episode wanted to share more of a reminder on, again, just the golden rule that we oftentimes forget as real estate operators is just how hyperlocal real estate is, and that it generally pays better to focus on bottom up data points versus top down, even though the top down ones tend to be the most widely reported on and the loudest, piercing through even the mainstream. So an example of that is that we were looking at a rural property in southern Illinois. My home state, grew up in northern part of Illinois. This one much further south and far more rural. That's the thing, is pretty much anything outside of the Chicagoland area is just like super rural area within the remainder of the state here. So this was a fairly borderline deal, maybe a just under 60K purchase, and potentially could sell for a double there. But we were trying to contact the realtor, and this had like a pretty tight closing date. Trying to extend that out further. We were brought in kind of late for this one because another funding partner bailed out of the deal. Capital is tied up. Again, we get a lot of folks who have reached out or deals saved because other have just failed to close. And yeah, again, that's just a story for another time too. And for this one, when we were chatting with the broker, very knowledgeable, younger guy. And again, I always appreciate the brokers who, they're incentivized to win our business, right? But the ones who, really take pride in their review and analysis of the market and are just not trying to BS you. Because I think they realize too that, or at least the good ones do realize that longer term reputation matters more. And so even if they don't move forward, or you don't move forward on a current deal with them, if they provide valuable analysis, you could reach out to them next time around, or potentially bring in a lot other deals going forward. So that's the proper way to do business. Not everybody operates that way, but we certainly appreciate it when we get honest reviews like that. And this guy's just saying, hey, it's been like a year ago. If you would have asked me this, could have been pretty interesting. We're buying it at, I don't know, roughly 2,600 an acre. And ideally, we would like to see a relatively conservative exit of hopefully around 5,500 an acre. And we were seeing comps that seemed to justify that, maybe even a little bit higher based on the characteristics of the property. But then the broker was more like, yeah, potentially you could get that, but he'd feel more confident at that K per acre number, maybe even a bit below that. And he was just saying, yeah, I mean, all day we could have hit 5.5, 6K a year ago. Now it's just been a tougher market as of this year. Just, again, kind of continued pressure from interest rates and I guess taxes higher. I know Illinois is a high tax state for properties, and just income tax, just high tax all around. And so he's just like, yeah, I'm really not confident I can give you a great estimate here, both on how long it's going to take to sell this property. We should know a lot within the first 7 days. And even though like the characteristics are solid here, like it's been relatively slow. There's just not a tremendous buyer pool right here. So again, when you really hear that honest opinion from brokers, I get it's obviously helpful since we leverage them so much, since we operate nationally. We're not local to any of these areas. Pretty much anytime we consider properties, even if I was doing something in Austin, I would still be considering a local realtor's perspective on a deal in virtually any case. That made us more hesitant. And like that's the thing with, like, I just grill about downside protection, deficit protection. And like, yeah, there's almost no way we would lose money on the deal. Pretty much 0% chance of that. But like, is it worth, investing the funds from the opportunity cost perspective that might be tied up for a bit and just like not have the margin that we're typically looking for? So in that case, like, okay, can we renegotiate a better deal here to see like if we're able to work it out? But a key thing with all this in mind, like I preface this just to show again, like our kind of strategy for diving in and how we work with brokers. And again, we've been doing this a long time, so it's like it's easier for our professionalism and just knowledge of how to operate within the land space to quickly get brokers' attention, because they know we're legit even from a first phone call, and more likely to just, again, because we can probably smell BS earlier than anybody else, and they probably appreciate folks who can talk in jargon regardless there. And again, just kind of getting to the root of the matter here. But in relation to my first point, and I know I've talked about this, plus this is like enter the mainstream, right? Where, this bottom up versus top down approach, where like, okay, the narrative has changed more where, in general, the southern part of the U.S., western part of the U.S., decent chunk of the East Coast, especially North Carolina on downward, has been feeling downward pricing pressure, particularly from homes, but land is correlated with homes for the most part. And the more resilient areas of the country that are having more appreciation, especially from a housing perspective, is the Midwest and the Northeast. Part of that has to do with just tougher zoning regulations, tougher to get building approved. There's just less available inventory to work with. Not as many builders are operating up there, or just less kind of land to work with as well, especially in some of these smaller states. A whole bunch of other factors like the return to work, etc. too. So plus the South and the West started becoming a bit more unaffordable as well, so that just decreased migration rates as well. As we've updated our focus to have a higher spotlight or a brighter spotlight on the Midwest and Northeast regions of the country with this in mind, that's when I was like fairly excited. Okay, Illinois here, this could be a little bit more of a resilient market. And in fact, out of all the states, from the data that I've seen, from housing at least, Illinois is expected to appreciate the most over the next 12 months. It's like a complete reversal again from 3 to 4 years ago when it was maybe the worst state or facing the largest migration out of it. So it's just again crazy how fast things can turn. But like I just kind of alluded to and directly kind of quoted, this broker was just saying, this has just been a tougher market, and at least that part of Illinois, and he operates across much of the South, a larger brokerage down there, and is quoting kind of the property taxes and interest rates, and that, just wasn't feeling as confident that last year's market was better. And who knows how long things might take to kind of play out and improve down there. So that is kind of the conclusion to arrive at here, is that, okay, we can take these macro top-down perspectives that can relatively start guiding some of our decision making, but ultimately it matters on a county by county, zip code by zip code, even street by street level for what true pricing is for the underlying asset. And so I just found that to be a very valuable data point, because it went against my assumptions for areas of the country that seem to be having the opposite narrative recently. So just keep that in mind. Again, core takeaway, real estate is hyperlocal. Never forget that. Otherwise, you stand a much higher chance of losing money, which is not what we want to do. So all of that in mind here, seriousland.capital for any of your funding needs. Again, $50K minimum purchase price, $50K plus preferred. Land Daily Diligence Facebook group for zero cost review of your land deals. I was just on that earlier today, reviewing a deal in Georgia. Low price, but pretty interesting from the variance in the market. And then landpricer.ai for the most reliable land pricing tool on the market. Should have the testable product ready tomorrow per my engineering, or our engineering team rather. Looking forward to that as well. Subscribe and share. Take care, everybody. Talk to you tomorrow. Bye.